you're a Japanese investor and you put 100 yen in the stock market 30 years ago, that 100 yen has grown to a whopping 140 yen. And you're looking across the ocean, you're saying, wow, I could have put that in the S&P 500, it would go 550. I could have cherry-picked the top of the market and shown you the market down 50% from the peak, but I'm just trying to be unbiased and just show the last 30 years. The market hasn't really done much. That has huge impacts on psyche, the way that people think, the way that people invest. In Japan, they're now wired to think that stock markets you don't make money in. A yen today is going to buy you less than a yen tomorrow, deflation. And what they're trying to do is they're trying to rewire people. So I talked about impacting the psyche. What we have here is household and company corporate cash as a percentage of GDP. So this is going back to 1980. And what we've accumulated is 11 trillion, with a T, of cash on company and household balance sheets. And this chart shows it as a percentage of GDP, just to show that it's been increasingly common. Again, just to put that in reference, that's the same amount of cash that corporations and households have in the US, and the economy is a third the size. So you have this hoarding of cash. This breaks it down here between companies and households. On the left, you have companies. On the right, you have households. Roughly 2 trillion on company balance sheets, 9 trillion on household balance sheets. Put that in context, there's 125 million people in Japan. It's roughly 50 million households. So each household has nearly $200,000 of cash. It's not too bad sitting there. Again, that's on average. So I'm sure there's a skew there. That's a lot of yen. What we're starting to see is recent government economic policies, which I'll talk about in a minute, causing this cash pile to stop building. And this is an ISI report. They do kind of some macro research that I read just out of interest. And they're kind of highlighting here that you're starting to see that cash pile stop building. There's no way you can possibly read this, so I will explain it to you because it's so small. This is the household balance sheet of Japan, United States, and Europe. Big takeaways here, the dark gray box on the far left is cash. So half of household financial assets, this doesn't include real estate, are sitting in cash. They only have 9% in equity markets today. Again, for comparison, in the United States, roughly a third of household balance sheets are in cash, or in the stock market. Now, many households are reassessing this asset allocation because I showed you earlier the 10-year Treasury, real versus nominal yield. This is the exact same thing for the JGB, Japanese government bond. In the black, you have the 10-year going back to 1980. Green and red is the real yield. So what you have now is a spike in inflation, given all this cash piling into the market. Inflation now is just under, here it's just about 3%. So you have a negative 3% real yield on owning a JGB. It's just starting to get in, people are just starting to understand this, that has huge implications for your comfort level in sitting on all that cash. And this is just like the US and other governments around the world. They're doing this on purpose to encourage investment and moving you out on the risk spectrum. It's the lowest rate in over 40 years since the oil crisis in the 70s. And the government's targeting sustained inflation of 2%.